This is a very important lesson, especially if you're looking to trade with a very simple strategy. This lesson is trading with support and resistance. The learning objectives are: you should know how to trade bounces, you should know how to trade pullbacks, and you should know how to trade breakouts. When you trade using support and resistance levels, once the price action moves higher or lower, don't remove these lines. An old support level usually becomes new resistance after a break. There are different ways to trade using support and resistance levels, so let's look at them. A very easy way to trade using support and resistance is by trading bounces. Many retail forex traders make the error of setting their orders directly on support and resistance levels and then just waiting for them to materialize. You should always wait for confirmation that the support or resistance will hold. If you've been looking to go short, you want to wait for it to bounce off resistance before entering. By doing this, you avoid those moments where price moves fast and breaks through support and resistance levels. By confirmation, I mean a close, like here, where you get a point on the line chart to indicate that it is not going through and it is coming back down. Another way to trade support and resistance is by using pullbacks. When resistance and support levels are broken, liquidation of losing positions will often occur, causing the price to reverse and the price will go back towards the broken level. This phenomenon is the main reason why broken support levels become resistance whenever they break. Instead of entering right on the break, wait for the price to make a pullback to the broken support or resistance level and enter after the price bounces. If I wasn't very clear, when I mean liquidation, what people do is they would buy, let's say, the euro to US dollar, like here, and then they'll set their stop loss here. This means that if the price goes through, they would have to take the opposite trade, which means sell. And because they're now selling, it creates the downward fast movement. But then eventually the price will go back up and then it will bounce off its now broken supports, where I would suggest you now enter, because often you'll see a continued downward momentum. Trading breakouts is probably the simplest way to trade. You would buy or sell whenever price passes through a support or resistance zone without slowing down. I would say that waiting for a pullback would lower the risk, because even in this real world example there was a pullback. But sometimes the price will just accelerate past the support or resistance level and you may not get a chance to enter if you wait for the pullback.